Hello and welcome to the KE Report. I'm your host, Shad Markwitz, and I'm speaking today with Sean Brodrick, editor of Wealth Megatrends and contributing analyst to Weiss Ratings Daily. And Sean, it's always great to get you on the KE Report just to pick your brain on what you're looking at in the markets. Before we dive into individual sectors and stocks, though, I just want to get some initial thoughts from you on the general market reaction we've seen almost across the board, be it general equities, cryptos, the commodities, on the back of speculation from markets that the Fed is going to be cutting rates aggressively in 2024. Their market has had the equivalent of what we've been calling a pivot party, Sean, and I'd love to get your thoughts on how you see this.
Sure. Well, I think that the market's being too optimistic. I am quite bullish on stocks. It's just I don't think that the Fed's going to cut anytime soon. I'm really putting my expectations for any Fed cut out to the middle of the year, maybe something like that. We'll have to see what happens there. But we saw the market blast off because we saw a Fed pivot. And we know that because the Fed put out its dot plot, which does look at a couple of rate cuts in the new year. The thing is, the Fed immediately came out and walked that back, trying to confuse the market, basically, is all I can say. They believe that they can't let the market get too ahead of itself, and I understand that. I do. But I wouldn't count on Fed rate cuts. On the other hand, there's so much good going on for the economy that if you're in stocks that are exposed to the economy, like, say, industrial stuff like that, then I think things look quite good. There's a bunch of sectors and industries that I am quite positive on. So even though I think the market's gotten ahead of itself on rate cuts, overall, generally, I am quite bullish.
Well, let's pick it up there, Sean. As far as what you're doing in your own portfolio, you mentioned to me off mic, you've made a couple of changes in various sectors. How have you been doing some sector rotation?
Well, just this week, we took a bunch of uranium gains. And the reason for that is because even though uranium itself keeps moving higher, uranium stocks are actually weakening broadly. Now, I didn't sell all my uranium stocks, so don't think that I've moved completely out of that sector, but I sold the weaker ones just because if we are entering a period of weakness, then, you want to be prepared for that. So that's one thing I'm doing. I'm still strong industrials. I recently added gold positions in Resource Investor for the first time recently, actually, in just added those a couple weeks ago. They haven't done anything yet, but that's okay. And in Supercycle Investor, we've really been completing our transition to doing a lot of artificial intelligence, cybersecurity, the cloud, and all that stuff. Because I have to tell you, my biggest forecast for next year is I believe we're on the cusp of a new tech supercycle. It will be led by AI, but really it can go throughout the whole tech space. Anybody that can use AI to make their businesses more economical, more efficient, more productive, that'll give them an earnings boost. And so I think there's some real potential there. And so that's how we're playing that.
Well, just a quick follow-up on that, since AI stocks and defense stocks and cybersecurity stocks are a big focus and a big mega trend you see unfolding and continuing to unfold, are there any areas that you think give investors an edge or niche subsectors within those that you really are focused on?
Well, one thing we are into in Supercycle Investor is we like defense stocks that have an AI edge. The Pentagon is pouring a tremendous amount of money into artificial intelligence now, and it's easy to see why. Part of that is because we know how effective drones are. The war in Ukraine, as well as Israel, has shown us just what drones can do on the battlefield, how drones are changing the battlefield. Now, imagine if you can have drones that think, and then what you have is you have aerial weapons platforms that become hellhounds and pursue the enemy much longer than the enemy can actually stay hidden, for example. So that's one of the things that they are working on, is making drones smart. And I know that will terrify people who watched all the Terminator movies when they were younger, and I was one of them too. It looks like we're building Skynet, and it's actually beyond that. We are now building things that are like fighter planes, but they're drones, but you can put artificial intelligence into them. You can swap out whatever weapons you need in them. They can fly with a fighter plane like a swarm and just, I mean, so it's a magnifier of force, sometimes tenfold or more. They now have new like submarines that they're building in Australia right now, but we'll have them soon. That's just like a test thing that they're doing down there. And you don't have to put people on them. People are the worst things to put underwater because we can't breathe, right? So you have a submarine that doesn't actually have to keep the water out. It's much smaller, maybe the size of a school bus. It's fast, it's quiet, and it can go deeper and go faster than a human sub could. So those things will also be run by artificial intelligence. And the newest land vehicle they are rolling out, it's a replacement for the Bradley. That's going to have artificial intelligence too. So you'll be able to send tanks into the field that are operating on not like remote control. They'll be thinking for themselves. They can patrol a battlefield and take out the enemy. So those are three ways. I can give you more, but that's already enough to actually expand your mind a bit, I hope. But just the real potential in the defense industry is enormous because nobody wants to risk soldiers. I mean, that's always the heartbreaker when you find out soldiers have died in a war, you've lost soldiers, stuff like that. If you can take that out of your equation while still punishing the enemy, that's a huge step up for any army. And also because you don't have soldiers involved, it becomes cheaper and like stuff like that. You can see why the Pentagon is moving toward artificial intelligence tremendously. And so that's something we're going to see in the near term. And so we're making investments for that as well.
That's a fascinating topic, Sean. And yeah, you've really got it covered there with the water, the land, and the sky, whether it be submarines, tanks, or drones. You're covering all the elements there. And it's interesting how AI is really factoring into so many different sectors, be it retail and factories, all the way up to the defense sector. So definitely something we'll keep tabs on. And if people like hearing more about that, you should definitely check out Sean's work. We'll put a link to that down below this interview. But let's pivot over to the resource sector. You did mention that you were taking some gains in uranium stocks and lightening up a little bit, not exiting completely. How are you looking at the rest of the energy sector, though?
Well, the pullback we've seen in oil prices has been brutal, and you probably saw that just on Wednesday, they just announced that the U.S. is now producing more oil than ever. We're outproducing Saudi Arabia, we're outproducing Russia. We are just producing like crazy. And so this has been painful for my oil stocks, but I haven't been a seller. And the reason is because I specialize in buying oil stocks that pay us to own them. So we can ride these things out. Oil is very cyclical. At some point, what's probably going to happen, this is my guess, I'm not saying I have inside information in what the Saudis do or something, but the Russians have been cheating like mad, which, well, they have a war to pay for. You can understand why they're doing it, but they aren't keeping the agreements that they've made with the like Saudis and the rest of OPEC plus. At some point, the Saudis are going to get sick of it. And so at some point, they're going to outproduce everybody like they did not that long ago, drive prices way down and steal market share and force other people to cut back. And at that point, once we get through that pain, then we're going to see the price go higher, probably much higher. So what do we have? We have a bunch of oil stocks. We're getting paid to wait. These are all great stocks. They aren't going away. They might cut their production if like Saudi production gets too high, but that just means that when prices go higher again, every barrel of oil they make will be worth more. So I'm just riding out what's happening in the oil industry right now. I'm not bearish. I'm not especially bullish yet. We have seen some stuff in the Red Sea that's giving everyone the heebie-jeebies. And so we have seen prices go up because of that. Now, my view is the long-term on oil. I think long-term it looks great. And so that's pretty much how I am positioned. If I was going to buy anything new, I'd make sure it was something that pays a dividend, that I believe can keep paying a dividend, and that will likely raise that dividend. That's what I'm looking for. The other thing to buy is those stocks you think will be purchased by the big oil companies. There are a bunch of small stocks that fit that bill. And I wouldn't blame anyone for buying those either. So there's a bunch to buy in the energy space. I guess I'm sounding kind of wishy-washy to you at this point. What I'm saying is that you have to approach these stocks individually. In the short term, I think oil prices could go lower, but I'm quite bullish longer term.
Yeah, it makes sense that it's really more of a stock picker's market in the energy space because there are still companies that stand out that are doing all the right kind of things to build value, regardless of what the sector does as a whole. But it's not really a rising tide lifting all boats at this point in time. What about the lithium sector? We're going to need more batteries to power all those drones and tanks and submarines. How are you looking at the lithium space, Sean?
I sold most of my lithium stocks quite some time ago, unfortunately. I still have one, and, we're keeping an eye on it. It's really been disappointing. Part of the problem is that those companies that make batteries that use lithium are becoming more efficient about how they use lithium. So that's changing everyone's forecast of how much they'll need and stuff like that. I think there are still some great opportunities in there, especially in Argentina. And I think what you'll want to find is the lowest cost producers that can really outperform higher cost producers. I think there's some real potential there. That's kind of what we're doing with the one lithium stock we have now. We're still down 10%, so I'm not going to crow about it at this point. But I think longer term, lithium looks quite good. It's just we're going through one of those cyclical things you have in most commodities. Another thing we can talk about, though, and we probably should, would be copper. Copper is really showing signs of a bottom, which is strange considering that, everyone, they think that metal depends on China, and China's having a terrible time. But if you look at it, copper's been bottoming at least since November, and actually, the real bottom was put in back in October. It's headed higher. I own at least one copper stock that's looking very, very good right now because of what's going on there. You know what else looks good right now? Strangely enough, steel. We've heard all these stories about how steel demand will be lower, and yet the steel stocks are actually doing good. What's going on with there? I know there was one takeover of U.S. steel by one of the Japanese steel companies, but this is an industry-wide thing that I'm speaking about. So steel and copper, they're both looking good. I don't think the global economy is nearly as bad as many of the leading economists want us to actually think it is. I think things look more positive, which means that, that's good for producers of the base metals, but also for industrials, because I think what might be driving this is that, yeah, we haven't seen central bank interest rates come down, but the market interest rates, those used by banks are actually coming down a bit. It's easing the strain in those industries that depend on people using credit to actually purchase things. So that's good for the industrials, good for the base metals. We're seeing housing starting to pick up now and stuff like that. So maybe that's why we're seeing copper improve. Maybe that's why we're seeing steel improve. And so I'm generally bullish on those industries for next year.
Well, Sean, and in addition to being bullish on the industrials and commodities like copper and steel, and some of that may be the interest rates pulling back, and some of it may be growth in China that people had underestimated coming back to the table. But the lower interest rates and the dollar pulling back some also has been a boon to the precious metal. So let's maybe wrap up with gold and silver. How are you looking at the precious metal sector?
Gosh, I think it's going to have a good year next year. I really do. I mean, we are coming to that junction of like supply and demand, where things should really start ripping because very few people built new mines for so long, especially in gold. And yet the demand for gold, especially by central banks around the world, just goes higher and higher and higher. And also, thanks to inflation, mining costs for gold has gotten higher and higher. So the cost of starting a new mine is just getting exorbitant. Nobody wants to start a new mine anymore either. So I think that there's a good old-fashioned supply-demand squeeze coming in gold and silver for next year. That's how I'll be playing it. As I said, I recently got back into gold stocks. Probably be adding, I can think of at least one nice little silver miner that I want to buy too. I'll probably buy more, but I'm going to take my time about it. I know when these stocks rip, they can really rip. They just go. Like they suddenly take the elevator up. But now I don't see a hurry, but I am taking positions because I want to be well positioned when this thing actually happens. So I'm just picking up the best of those stocks now.
Okay, well, we'll keep tabs on it and how things may shift once we get into the new year, but appreciate you sharing what you're doing in your own portfolio and some of the trends that you see in motion as we close up 2023 and head into next year. So we'll be back with you in a couple weeks, Sean, but always appreciate getting your thoughts. If other people like getting Sean's thoughts, definitely click on the different publications he produces. Put a link to that down below. And until next time, Sean, always looking forward to our next conversation.
Hey, happy holidays, Merry Christmas. I hope everyone has a great year, and we are going to kick butt next year in 2024.